Are we about to see one of the biggest bond market freakouts ever, with huge debts needing to be refinanced and Donald Trump testing the waters about what to do with Jerome Powell? What's in store next for markets? And as we know, big tech is about to kick off. So as we hit cross correlation across the NASDAQ, a breakout in hyper stocks and retail traders taking massive leverage, and a really interesting read from Bank of America when it comes to cash on the sidelines, what's in store next? In today's video, we break down stocks, commodities, and cryptos to really take a look at what's going on underneath the hood and whether we could be in for a massive seasonal event. Guys, this one's not to be missed, and we'll see you in a moment. There's a lot to break down. Well, welcome back, everybody, to the Daily Show. It seems like it's the calm before the storm when it comes to markets because, of course, we have been seeing some big news when it comes to the macro, the data, and the key flows. To kick things off in today's video, let's discuss, though, the big topic that's been blowing around, and that is, will Trump potentially try to fire Powell? Now, technically, it's not allowed, but his tenure is up in 2026. And we saw an announcement some kind of announcement over the last 24 hours where the White House said Trump will fire Chair Jerome Powell, and the market instantly tanked off that news. Then Trump came out and denied the rumor, and it was all the way back. But this actually sent a couple of large transactions through. In fact, we saw a huge one on VIX futures, and it came in just before Trump came out and said, "Don't worry, guys, just a joke. I'm not doing anything in particular." So clearly this is like a calm before the storm. The market, it doesn't have much volatility in right now, but there are signs that problems are around. And this happens, of course, every year, sometimes around this particular area. Q3 in particular is a dangerous period. August, September, October. 3 of the weakest months of the year, September being, of course, the worst overall, often trigger what we call sell signals. And according to the latest Bank of America report, it looks like the FMS average cash level has dropped under one of the most important reads, and that is 4%. Now, when we tend to get underneath here, we've only seen it a couple of times. 2021, we all know how that played out. 2000, 2007, and indeed, actually, earlier this year when we were talking about it in February of 2025, just before we start to see the market sell off indeed. Now, why is this important? Well, it's one of those points where you've got to start bringing together the signs and the pieces of the puzzle. And we'll talk about seasonality if you haven't been watching the videos for a while, a little bit later on today's video. But before we go down that line, I want to talk instantly here about liquidity, because over the last 24 hours, we've seen quite a lot of announcements from, let's say, China, and big information starting to come out for Baba, which is, of course, Alibaba, one of the most well-known stocks. They seem to be settling a bit of a case that's been going on for years to do with Ant Financial, and we're starting to see the signs of pickup when it comes to liquidity. And one of the things we've been talking about now for over a year has been the significant amount of liquidity that's been injected into the Chinese markets. And this has led into, of course, overall a fairly bullish recovery, which is now currently testing a huge resistance point. Now, why is this important? Well, we've seen a couple of large dark pools. And most recently, around July 9th, we had one of the largest dark pools ever on the China Bulls 3 times levered ETF. And so far, that's been, well, as you guessed it, pretty damn good. Now, why is this? Well, often Wall Street moves in mysterious ways, but generally they have to show their footprint. If anyone's familiar with Wyckoff, you may know that generally speaking, markets will show their footprint in large volume or kind of big trades that are clumped together through the dark pools. And we often see this, and we obviously cover it on the channel. But while we haven't seen one currently really to note on the highs here for the S&P, we are starting to see signs of things cracking underneath. Most notably of that was, of course, this week's inflation report. And while the market didn't worry about it, clearly it's showing that some forms of inflation are coming back. Whether it's appliances, whether it's laundry equipment, or even household furnishings and supplies, there's clearly a bit of an uptick because of the tariffs. And most inventories seem to be around 4 to 6 months at this stage, with even some up to 12 months. So it always lags and it always is delayed in terms of when you see a tariff implemented and when it actually starts to take effect. This could be a storyline, I believe, of the next couple of months. And of course, it's something we're looking at. And it's causing problems across the board. Not only is cash at all-time lows in terms of the Bank of America survey there that we saw, we're also seeing liquidity declining in the bonds market. And as you guys know, the bonds market is arguably the most important debt market in the world, and it's just not the same as it used to be. Now, this has been a spike in 2025 driven by geopolitical concerns and, of course, predominantly just driven by all sorts of concerns about US debt. And this is making an illiquid market. And that's one of those markets that is susceptible to flash crashes and big events. Now, it's not to say it's going to happen tomorrow, as these things are incredibly difficult to predict, but at the same time, it's something we want to be aware of. And as we've talked about recently, we've been rallying up higher to make new highs, which is definitely not a bearish sign, but we're starting to hit those correlation periods. Whether it's the S&P 500, NASDAQ, Russell, or even US dollar, all of them are kind of at those critical levels where you expect them to start to find potential flips. And as you guys know, this tends to happen around the seasonality of the current period. Now, new highs tend to happen in clusters. So the good news for the bulls out there is that it's unusual to see just 8 in terms of new highs. And that's all we've got here so far for 2025. I guess we've almost got 9 now. But we usually start to see upwards of even 50 new highs as they start to come through. So why does this count? Well, of course, if we see a pullback, we know that Wall Street hasn't purchased enough, especially the hedge funds, when it comes to these markets. And what we're starting to see is a sign of rotation. So big tech stocks have been doing really well. Semiconductors obviously been leading the market. That is usually what you expect. 83% of the time, in fact, big tech innovation stocks lead everything that we see around the world. But what happens when we start to see commodities pick back up again? And could this be concerns of reinflation or stagflation? Well, we have a CPI number that's a little bit hotter. And of course, now we have commodities excluding gold, as you can see here from top-down charts, showing a ratio that has traditionally been where we start to see a pickup in the harder metals. Aluminium, iron ore, these types of metals often do start to run off these points. And we're already starting, rare earth minerals and metals have already started. And obviously that was a huge announcement between Apple and MP just 48 hours ago. So with retail traders going ballistic, buying into everything and buying every hyper stock you've ever seen, it seems to be like 2021 again. Similar types of cash ratios, similar types of leverage, in fact, even more leverage in the markets, and a correlation point. So is this normal? Well, it is pretty much what exactly happened during the dot-com boom. We were bubblicious. That was that stocks became concentrated. Again, if you don't know your stat right now, the top 10 stocks in the S&P 500 make up 37% of the index. Last time we saw that was this 1998 to 2000s narrative. And of course, this means that we're in that kind of final stage of what we call a bull market. And that's been probably exemplified by the financials starting to underperform recently. If you don't know about financials, they tend to be a mid-cycle play. And at the moment, we're in a point where mid-cycle plays such as financials have started to decline and underperform. What is performing? Tech, hypergrowth, any business that was kind of like a 2021 business, it seems, and they've all been picking up. So as you can see with this 98% correlated chart, we come into a period here of usually lackluster returns, whether it's a pit, which is sideways, or a pullback, which is more traditional with this period of time in the year. One of those two things could potentially be on the horizon. And it leads off that Christmas in July. Now, on the 15th of July, approximately, we usually start to see the topping of a market if we're going off history from 1985 to now. You guys already know this because I bring it up in many of the videos, but it's obviously a sign of caution. And of course, this makes sense to the choppy year that we're currently seeing. The good news is going to be tech. It's expected that tech earnings will be good, but has the market priced in what we call perfection? Many experts out there will say it's priced to perfection. You've probably heard the term before, but it kind of really is. Forward PE ratio is getting very close to being the highest point we've seen, not actually had since 2024. And it means that each and every earnings counts. And over the next 24 hours, we'll see a couple here. TSM, Netflix, and a few others. Just remember, guys, when it comes to these earnings, it's all about the expected options moves. If you're not familiar with them, make sure to follow this channel because yeah, if you're not aware of Netflix being a plus minus 8 according to the options market, then you may not be aware that that could happen and you're in the wrong side of the position and it could blow you out. In terms of which positions are most bought, which positions are most sold, according to Goldman Sachs' latest report, these are the implied moves and these are the crowded longs and crowded shorts for some of the most popular sectors and stocks. So be aware of them and make sure you're, of course, checking them out. Now, one other thing I just want to remind you guys of, I'm always posting over on LinkedIn now, and I'm sharing there a bunch of psychology, a bunch of stories, and a bunch of other information that's really helpful for you as traders and investors. It's completely free to follow, so do so by checking out the pinned comment down below, and make sure to check out, of course, some of the extra information that we've got there. Now let's jump into the charts. The big one here is, of course, the S&P 500, and you guys know that it is on that trend line. We are at that point where we expect sideways market action. That is a bit of rotation to occur, potentially into metals as well. And then, or we expect kind of markets to come down to key levels, particularly the anchored VWAP and weekly 20 moving average, which currently sit at around 6,000. So that would give approximately from the high here a 5 to 6% pullback. Now, some people expect upwards of 10% pullback during this time. But just remember, be flexible. The market rally didn't happen for no reason. It is very bullish on currently AI growth. And of course, that's the big thing here leading these markets up. When it comes to the US 500, it is incredibly trapped. You can see here the news when it came out that Jerome Powell might be getting kicked by Trump. That really did start to freak the market out straight away. And then, of course, it was instantly reversed. But I think this is a story that is going to continuously come up over the next 6 months. You're going to see a lot more comments around this. And of course, you're going to see a lot of speculation each way. I always say the big thing is follow the flows, not the speculation or the news. So in general, we have patience. And of course, we're looking for those signs of any type of pullback. We might have data that suggests that could happen. You don't know it's going to happen yet. We're just at that cross correlation. S&P 500, 6,300 remains the major call wall. And obviously a break and close above that is going to be very bullish for the market. And it looks like we're still trapped for now until we get a catalyst between 62 and 63. So no new updates really there. Every day seems to be the same in the options over the last couple of sessions. Tesla hit the 320 and then kind of closed above it, suggesting there may be further bullish action on the horizon. Seems like the Trump-Elon kind of dichotomy on X and Truth Social or whatever has stopped. So what this is allowing to happen is, of course, robo-taxis and other good news stories for Tesla starting to come through. And I saw today there was a new announcement, I believe, to do with a Model X or a Model Y with different seat capacities and all sorts of things. So obviously, when the news is rolling, that can help stack the hype train, and the hype train can push into positive gamma. So I guess a 320 plus close is certainly not a bad sign for Tesla. Nvidia, you can see here 170 is the call wall. We did close above that, so it pushes towards 175. And you'll know that 175 was a pretty big level for me. And it's because we saw it on the options a while ago. So we're very close now to that correlation at an overbought level when it comes to this particular stock. Let's actually take a look now at the lead indicators. Then we'll look at some of the metals, and then we'll look at Nvidia itself and, of course, the other indices. First up here, when it comes to options and, of course, option spreads, you guys can see here very clearly that we've started to see a little bit of a pickup in fear in the bonds market. Now, it's not out of control, but it certainly is something that we're watching. And just like the last 24 hours on the longer term yield, what you'll notice is it spiked up during during the White House's kind of leak there, and then it went straight back down and ended up as what we call a long leg doji. So are the bonds markets starting to get a little bit jittery? I would say yes, they are, because we wouldn't be back at 5+% on the 30 year if we weren't. And this is going for Japan as well. If you look at a JP 40Y or 30Y, you're going to notice that bond yields continuously spike up into this high. And while I don't sell based on that alone, and neither do you guys, I know, it's something that you have to be watching, you have to be paying attention to. JP Morgan managed to hold the 20 again, but it has kind of solidified at this point a potential lower high. And if that then closes underneath 280, certainly a key level to watch. What that's showing us is that financials are weakening versus the SPY, and that traditionally hasn't been that good. And you can see here it's been happening for a little while now as rotation has occurred. When it comes to the US dollar, it bounced. It then came back down to our trend line and it bounced again. So again, this was all those announcements coming in from Trump and the White House. And as soon as we heard all of that stuff, the dollar did start to move. But yeah, quite a nice bounce off the trend line. And obviously, if you had alerts there, that'd be pretty cool. And at the moment, it looks like the dollar is more strong on the small time frames than it has been. Gold also spiked up, but was unable to break through 33.75. So that's the new level that you want to see broken above for big bulls. And of course, it does have that inverse head and shoulders. So generally, gold looks pretty bullish. And silver went down a little bit, and now it's trying to rally. The big level remains at 38.37 to continue the rally that we've been looking at for a long time. And you guys know it's been pretty good. US oil, you know what I'm going to say. Yeah, I don't like it. I don't really care about US oil. At the moment, as you can see, it's stuck in the middle of a range, but you still want to analyze it regularly or at least set alerts for it so you know when you're going to potentially be able to go back to that and say, hey, this looks pretty good again. What about Tesla? Well, as you guys can see here, Tesla has been bouncing off that 280, 300. If you had, I guess, the cojones to buy it the other day when all that news was coming out, then so far you've been, I guess, pretty well justified. And a close above 320 does open up that idea of getting towards those next call walls, 350, 380, those kind of levels we've seen before. Now, we do have announcements from certain stocks, and one of those is going to be IBKR over the next 24 hours. Now, what we've had recently is a huge pickup in all of these particular brokers and companies to do with crypto. And as you guys know, tokenization, deregulation, all of these things are driving cryptos big time, and anything to do with that. You can see here, Hood, $103, absolutely on a tear. Everybody is on that. Now, it is pretty overbought. There's no doubt that sector is, but there's not really a sign other than Hood had one large transaction on it that the markets are completely done with it yet. It still is in an upward trend. The reason I bring this up is because people are going hyperactive. You can see here semiconductors still outperforming the SPY. People are really loving those. We're getting close to that 175 for NVIDIA. We're starting to see rotation occurring again as well. Seems like rotation's going into big metals and also possibly China. Baba broke up the other day. And of course, we're seeing stimulation, that is liquidity, coming back into the Chinese market. So just like always, you come from the abundance mindset. We always like to talk about abundance here because the big thing is we want to look for other opportunities. And you guys can see here the Chinese market is starting to look a little bit better. A series of higher highs and higher lows, a little bit of liquidity injection, nothing wrong with that. And then we break up to the upside. Well, that could start a squeeze. Now, the thing about the Chinese market is it goes ballistic. And you can see that straight away. When they get excited, my goodness, no one gets excited more. And they are huge moves. So when they happen, they can be ferocious. It's like a Bitcoin, except it's an entire index of stocks. So in this case, yeah, it's something that we're, of course, clearly watching. US 2K still struggling, obviously tested the 20 moving average, bounced off that, coming back to that most traded zone. Now, that most traded zone is around that 2240 zone. And basically, this is a little head and shoulders on the smaller time frames. We talked about it before. So if it starts to sell off, that will be possibly a canary for the rest of the stock market. Small cap starting to struggle a little bit there. Another one is that we still haven't seen that rotation into smalls. We really want a 0.365 ratio, and that still hasn't happened. So small caps underperforming for now. And then there was crypto. Now, has crypto started a head and shoulders? A lot of people are going to have this strategy or concept. I'm going to still go with the upward trend generally for crypto because Bitcoin is still bullish daily, bullish monthly, bullish weekly. You know, it's bullish on all those time frames. You can see here this 120,500, as we mentioned last video. Need to break that to really get a new all-time high. And it's looking pretty good still, but really the winner was, oh yeah, Ethereum. Wow, guys, it hit 34. Bam. Nice work. I thought 33, 34 initially was a really good rally. So, hey, the most hated of the alts in terms of the big ones anyway, suddenly gets very, very excited. Is it overbought? Yes. Can crypto become ultra overbought? Of course. But I can tell you one thing, that is a huge supply. So, yeah, we hit it. Well done, I guess. I'll give you a clap if you had the faith in this horror show thing. So it's pulled through. And again, it just shows you great technicals, a kind of a ground swell, and just generally hype train. But as you guys know, everyone's now talking about it. So Did we just hit the target? Did we just hit the major level? Let us know in the comments down below. Is that it for Ethereum for now? And are they on to the next alts? It could be a massive altcoin season. In our next video, we'll be discussing some of the big correlations there for crypto, obviously looking at a whole bunch of different cryptos and ratios. And as you guys know, that tends to be what happens when the altcoin market starts. If you enjoyed today's video, then make sure to click on the description down below. Follow us on X. Also, check me out on LinkedIn. I'm posting a whole bunch there now, literally pretty much 5 days a week. So it's going to be some awesome content there coming. I'm really dedicating some great stories there that I think you'll enjoy. And of course, if you're interested as well, finding out more about how we find higher probability setups, smart money concepts, liquidity steals, nasty Wall Street, how we bring the data together with everything else, then you can check out our courses as well. And they are in the description down below. Thank you so much for watching, guys, and have a wonderful day. Bye for now.